started. Okay, so I will not miss this again. Oh, so I was talking in the last session. You are welcome back. In the last session, I was talking to you about this mistake. This particular session, very, very, very important. This is what I've not taught in the. It's not in the youth. I've not really talked about it. About this miss. Miss is a special condition that is to be considered potential in every trading concept of SNR. Yeah, this guy really lay emphasis on it. Arif T and his student. This is this guy, fresh. I don't know how to pronounce his name. Yeah, they lay emphasis on it, and I begin to work on it that this has a significant stuff. So what say I've told you a miss. This is when this is the diagram, the graphical aspect of it. A miss. That means there must be a space. When there's a space, that means in a smart money concept, that means a lot of liquidity, you understand, has been placed. You know, if we are going to introduce it into our smart concept for you to understand it very well, why that miss is important. I'm just telling you now why the miss is important. Why the miss is important. That means below, you know, markets always trade off support and resistance level. That is a significant low and high. Markets always travel to take them out. Oh, I'm not sharing it. Sorry. I'm sharing it. I'm sharing the screen. Check your this. If I'm not sharing it, it will indicate that I'm not sharing. Hope everybody is seeing the screen, please. I hope everybody is seeing the screen. So that's the meaning of. So that's the meaning of miss. You can see that in this place now, we have this. You can see the liquidity that lies below all these places. There's a lot of gap here, like this here, before the tap here. So unlike this one is a direct, it's a single candle touch. But this one is, it has a miss than this. This one does not have. That's why this place could travel so far. This place has a miss. See this candlestick. It does not touch this line before this one. That's a miss. This place has a miss. So I really leave more emphasis on this on the manual when you lay your hand on it. So try to, yeah, how to use the miss, how to. So that's the most important thing. Please take note of that. Take note of that. Take note of that. Then I told you that in your touch, if you are going to take any touch, you should look at for a wick of a candle, not the body. The wick of a candle is what validates a miss. It's what validates your SNR. Please take note of that. Take note of that. It's what validates an SNR. Yeah, I'm recording. Yeah, I'm recording, Tony. I'm recording. Yeah, I'm recording. Baba T. Okay. Sorry. Oh. Sorry. I thought I've allowed you in. I think you guys should do this so that you don't know. I have to do this setting. So I'll allow it to automatically allow everybody. Admit all. So take note of that 2 points I've told you. Take note of it. It makes your thing to be more significant. Yeah, not to be, because we have the aggressive, then we have the confirmation type of it. You understand? A single candle touch is what gives you the aggressive type. But when you have a gap that miss in the space before the touch, it confirms the strength of that touch. Yeah, it validates an according to RFCF. So it validates an necessary level. So it's not compulsory. The single candlestick still goes, it can still go, but the miss has more significance than that single candlestick. Yeah, that's what I learned from there. Yeah, it has more significance. So now let's go straight to the next session. We've covered this part. The first session, this is let me go straight to the lesson. We'll be able to cover candlestick chart, manipulation, type of SNR, fresh and unfresh. We've covered SNR and miss. Then we go to the storyline, which is where the most important this thing is, storyline. Because if you don't get the storyline very right, you may not get the thing well. Storyline is simply it's a bad direction. You must get right the direction of of the market. You don't just take trade without going through the storyline, because every candlestick, I tell you, every time frame has its own unique storyline. Every candlestick has its own unique storyline. You must listen to the storyline of each time frame. So people said, you must not trade only one time frame, because within that time frame, there are what we call roadblocks, obstacles, we call it internal swing highs and swing lows that are standing as an obstacle to the direction of a particular trend. For example, if you are trading on daily and you don't check on 4 hours, because 4 hours the daily we have multiple pullbacks, retracement, so that when you have notice of where the price is possibly going to react, you know how to adjust your trade, your trade. But if you don't have the knowledge of it, you enter trade. It could be the trade you enter could be just at the breakout. And when breakout happens, there's usually a retest. And by the time this thing is retesting, you understand, you are taking off by the drawdowns, a lot of drawdowns. Like for example, this place now. See this place now. See this place. If you come here, this is daily. You say, okay, this is a breakout, daily breakout, and you enter your sell. You can imagine what happened next, and you put your stop loss. Probably you put your stop loss here. You understand? Or you don't. Maybe some of you maybe you don't put stop loss. You can imagine if you are trading with little capital that does not have much equity to accommodate the drawdown. You can imagine what happened next. You see the pullback. See the pullback to tap into this place. But if you are going to put your stop loss here, that's almost about how many pips there? How many pips? That's almost about 185 pips. It's not good for scalper. It could be okay for swing trader or positional traders. But for a scalper that is trading just maybe it's looking for this, it's not good for you. That's huge drawdown. You understand? Because you don't have the knowledge that okay, within this daily time frame, if you go to 4 hours, you will see the pullback. So you will always see the possible, pulls back in between that daily, so that you will know that okay, this is where you are going to enter. You will not enter here, but you are coming here to enter at a fresh level of this, of this SNR. This is a fresh level. That's a fresh level there. Let me remove this so I can see it very well. That's a fresh level there. So you don't want to remove it. That's a fresh level there. Can you see it? This is a fresh level. And that is why price usually traces it upward. A fresh level attracts this thing down when it is not fresh. Like this place now, as price is coming down, it will come to this. This is fresh level. So you must take note of those areas before you enter your trade, so that when you enter your trade, if you have a nearest fresh level of this thing, price will go there and take out the level. So for example, what this place now, this is a breakout of this SNR level with a miss. This is a miss of it, a breakout. Then we have a direct test to it to take out, to want to take out this level here, this SNR level here. You was tap into it. What you need to do next is to organize yourself and go to a lower time frame, because this is a daily rejection. This is a daily rejection. What about the gap before the fresh price? Yes, yeah. This is a gap. This is a gap. You know this gap now. This gap. See it. There was a reaction. See the pullback. Pullback. If you go lower to like maybe like 4 hours, it will be disrupted. Because it's not under except on the premium. You see the pullback here. See the pullback. If you go lower, you see the pullback. Let's go to 4 hours or 1 hour. You will see it. It has disrupted. Yeah, that's not what it. You can imagine. See it. See the pullback. There must be a reaction. But the fresh one at the upper level has more significance. It will attract more. Price takes this one out. It went higher again to tap into the daily fresh. You know, I told you that a price would normally travel from one fresh level of an SNR to another fresh level. To another fresh level. Yes. Take note of that. Take note of that. So that's the reason why you must always no police gap on the just please, just please, note that one now. So I'm trying to point out something on that on a storyline that we want to do now. Yeah. So this is okay. Are you talking of this place? Okay, maybe me. I'm talking of this place. Okay. You can imagine this place. Yeah, this place is fresh. This place is fresh because it has been broken. So is this place. Okay. That place is this place is gap. There was a reaction here. There was a reaction. See the reaction. Well, he got another gap here. That's obstacles here that return this thing downward. Or else it will have moved higher. But because there was an obstacle here, see the gap here. There was gap here. That's another thing I want to tell you. When you have a cluster of a SNR level at a particular, that's a confluence. We have them journey together. It's a very powerful zone. 1, 2. It returned the thing back immediately. Because there's a strong barrier. This is a strong barrier level. If not, when it tap into this a gap here, it will have been moving higher. But because of this strong barrier, 1, 2, 1, 2, at the same level, let me draw it out for you very well so that you can be able to see. At the same level, that's a very strong addition. Yeah, if you draw it out like that and very strong. I'm telling you, very strong. That is the reason why you must listen to every step, close and open. Note what's happening there. If price is going to react, look backward. There must be a level it's reacting to. There must be a level. Price is not a random. It has reason why it must react. You must look at it very well. See this place now. We have two barriers here. That is why this could not go higher. That's why it could not go higher. That's why it returned back downward. This place we have this thing here. We have this gap here. See, broken out as a fresh price tap into it. Then immediately it went higher. And because there's another gap here, it becomes fresh. That fresh gap. Fresh gap. Can you see this? See this gap? The body broke through it. It became fresh. Not the weak. That is why this place turned down, because 1, 2, they were closed. They were closed. They were closed. So if you go to a lower time frame, you'll be able to see the zigzag, the zone, why this thing reacts. Gap level that in my manual, I really dealt with it so much in the manual. I dealt with it so much. I lay much emphasis on it. Yeah. I lay much emphasis on it. I try to do a lot of trade examples, you know. That's why the manual is getting to almost about 100. We should do some trade I call it a flashcard, so that maybe anybody that get the manual will get the flashcard along with it. Yeah, the flashcard with illustrative, you know, graphics. This is what this is happening. This is the reason why this return back. This is why this, you know, all those stuff. Right? So that is why this place becomes so strong. It's a strong barrier. It's a strong barrier. Note that when you have a cluster of more than one level at a place, and price tap into it, very strong, very strong. So that is what you must understand, that in each time frame, there are barriers. So that when you are doing your storyline, you must be able to go from the higher time frame down to the lower time frame. Then the storyline, what is best? I told you that the storyline is all about the direction of a trend. Storyline is a direction of a trend. How to note the direction of a trend. Yeah, because every time frame has a story, so unique story, and that story must be completed. Must be completed. Whether 4 hours, 1 hour, 15 minutes, or 30 minutes, it must be ended. So if you, for example, you have this as daily, as daily SNR. You have this as daily SNR. This is the resistance. This is the support level. Now, if in between this daily, so we have the 4 hours. We have the 4 hours in between within the daily, right? So that means if this is a daily, if you have the this thing like this, and price moves in like this in daily, that means under 4 hours, you will see something like this, a multiple breakout, pullback, something like this. Now, what this means is that what it means is that this thing here, the pullback here in a daily, will give this place a headache, much headache. And once price get to this place in 4 hours, it will react. Once it get to this place in this, it will react. And once it breaks it out, once it breaks this place out, it got me to this fresh level of daily. So when a support is taken out and it turns to resistance here, for under this place here, this is a breakout. This is a 4 hours breakout. Under daily, you have it as a rejection candle, something like this. You might have it as something like this, just a single candle like this. Guys, don't. Repeat what? Repeat what? Can you retype that again? Retype it. I'm not. You say a in. I don't understand. Retype it. So this breakout here in daily is just a single candlestick. In a daily, it's a good candlestick, but you will not see it if you don't come to 4 hours. If you not you will not see the breakout. You not see it in power. So whenever this price must first of all, but before it will go to the support level of daily, it will first satisfy the internal swing high and internal pullback of this trend that is within this daily time frame. It must first of all take out, because the essence of the market is to sweep liquidity off the low and the high. So every low and high that exists within this daily must be trashed out. Once they are being exhausted, price will pull down to the support. So that whenever you see price is still in this place, in 4 hours, if you go to your 4 hours, that means you must get a lot of this thing that price is taking out. And until when price take out the whole 4 hours pulls back before you see this place being taken out as a breakout. Then if there are no any pullback again, it will face the fresh level of that support level of a daily time frame. So the essence of what I'm telling you is that every time frame must satisfy itself. It must fulfill the objective of what it contains. Every time frame, especially 4 hours. Especially 4 hours, it's a strong time frame for daily and this. Yeah, it determines what we call the roadblocks and this for this. Then 1 hour is intraday, or 30 minutes, 1 hour. Yeah, intraday, that will help you to, okay, this is we have discovered the high of the market this week. So price is grow big. It go up or it's coming down. That's what you got to know again under your 30 minutes or 15 minutes. So if a daily has been reached, maybe daily has been reached higher, that means, and is tapping into maybe weekly resistance level, that means as it tap into it, there will be a rejection. You are looking for a rejection of that weekly stop, that weekly support and resistance level, resistance. You are waiting for this. So when you get this rejection in your DC, what do you do next? Once you get this, you confirm this. You have confirmed this candlestick. You have confirmed this. You go straight to, you go lower. We have a 2 times, what we call 2 times confirmation rule. So another guy said it's only 1 time. So we can use 2 times. You can use, there's no penalty in that. You go 1 time frame lower, which is daily for weekly. If you want to confirm a weekly setup, you go to daily to see this, or if you go to 4 hours, you want to see a breakout like this. You want to see a breakout. You must wait for this. You don't just enter here immediately, because another candle can see push higher. But once you see a breakout like this in a lower time frame, you see a breakout, then you wait for a confirmation of this breakout. Is what will give you your DC. That's what we're going to talk about. Engulfing comes in. You can use engulfing to confirm that place. You can use engulfing. You can use what we call other fair of regular report. But once you get this rejection, daily rejection of a particular SNR level, it is not done that there is a setup for you. But how do you confirm? You are going to confirm from a lower time frame breakout. I'm giving you a first-hand information. You are going to get a lower time frame breakout pattern like this. This is the breakout. We call it so you know what we call it in what that means in SMC, chalk, or visual, they call it chalk. You must see this pattern at the level of that weekly stuff. You must see this pattern in the lower time frame. Once you see this pattern, it's confirmed. So you allow the price to tap back into this. You must get what you call your another this here SNR level. It could be It could be, it could be, it could be head and shoulder pattern. That's the most regular type. It could be like this. It could be head and shoulder, which is either KML or head and shoulder pattern. So that once you get this complete, and there is an SNR here that tap into it, you have a confluence. There may be like trend line. When we talk about the trend line, you have it here. It goes immediately. It's coming down. It's coming down. So you are now tapping. You are now looking at the next. What will be your take profit? The next fresh level of daily, or the next level fresh level. If you want to scalp, you look at the fresh level of that 4 hour of that lower time frame. But if you are a positional trader or swing trader, you focus on your higher time frame next fresh level, because as the price break out of this place, it's looking for a fresh level to tap into, fresh level of higher time frame to tap into. But meanwhile, that will not mean it will ignore the lower time frame fresh level. It will take the fresh level out. The lower time frame fresh level is what constitutes the higher time frame, impulse. So that is for this. Now we talk about the direction and the roadblocks in each direction. I told you that in every time frame, you must identify a roadblocks, so that when you are buying into like this place now, when you are selling, and you know that this place has a DC, and this place too is a fresh level of DC, you know that this is a fresh level of daily, you want to be very careful here that price is going to react. You have to be very, very careful here. The price is going to react. What do? You have to either you adjust your this or take out or scale out your profits, or you enter newly here. But if you don't have this notice of doing your analysis very well, check all the fresh levels and the next SNR that this price is coming to tap into. You must look into that. So those are the storyline behind every time frame. If you are trading on 4 hours, and the internet is now okay. You are trading on 4 hours, for example, this is a fresh level of SNR here that has been broken. Can you see it? That has been broken. Then what happened? Price tapped back into it. And because there was a gap here, can you see the gap? This is a gap. Price could not go lower. I'm telling you. This is a gap. This is a gap. Can you see it? That's a gap. This has been taken out, right? This one becomes a fresh thing. So later on, price is going to tap back into this place, because it has become a fresh level here, because we have a body that broke through it. So that's a gap. So that when so that's the essence of doing your storyline. My time is still, because time is running, it's running faster. So that's the essence of doing your DC. So I can give you the engulfing and the trend line. You see, have more DC to cover up. So that is the DC for storyline. You must identify where there are obstacles. What is obstacle? Obstacle are levels of SNR within the time frame you are trading. Within the time frame. So we'll not be able to go into this, maybe peradventure when the manual is. You see how to do your your entry, your setup confirmation, your entry confirmation, which I've really dealt with in the manual. Your confirmation of stuff. Where is it? So we have talked about this. So I want to move into into this engulfing stuff. Yeah. And trend line. So we can cover up. Yeah. So from here, this is the storyline, then to the storyline, then how to confirm your setup. How to confirm your setup. How to confirm your setup, what time frame to use for your for your setup, and what time frame to use for your breakout, what time frame to use for if you are a scalper, you want to scalp, this is the time frame. The time frame you want to use, because you must not use the same time frame for your setup and your entry. No. You have to know the importance of every time frame. Yeah. So these are the area of where I concrete and blah blah blah. So we quickly rush into that, and we move into this thing. We move into what next? We move into trend line. This is most important. My favorite stuff. Trend line. We're going to talk about the many types of trend line. Or let's talk about engulfing, because trend line will be the last one we treat. Yeah, trend line will be the last this one we treat. We'll talk about engulfing, the type of engulfing. You all know engulfing. If you go to your Google, just put in your Google image, you see engulfing, different form of engulfing. Engulfing is engulfing, whether it takes out weak or it doesn't take it, as long as the body has been engulfed. That is engulfing. That's engulfing. So don't allow somebody to be giving you different. So when you dig your own personal experience about it, you will know that engulfing does not have as long as the body is covered up. It's not particularly about the weak like that. I don't know, but people say, okay, yeah, this is engulfing, right? This is engulfing. Engulfing is simply a particular object completely taking out the previous object. Is the covering up of previous objects. Like this place, this is a bullish candle, right? Then you see the bearish candle covering up the entirety of this candle. That's engulfing. That's engulfing. This is a bearish engulfing. Then if you have the bullish candle covering up the entire range, the body, I don't really have focus on the width. The body is what matters to me. As long as this guy here covers up the entirety of this body. Because sometimes you can have this wick here longer than this candle. It doesn't really matter to me. The most significant point is the body. As long as it cover up the body, both the open and the close has been covered up by the body of this candle, it validates the pattern. It validates the pattern. So you have different type of engulfing. You have different variation. It comes in different variation. You can see it in different form like this. Which I put it here. You can see it in different form like this. Engulfing is engulfing. You can see it here like this. As long as the body is covered up. So this wick is higher than this, but the body has been covered up. It makes it an engulfing pattern. So then the one we are going to really talk about that is more powerful, significant, and can be a mystery or thereabouts. It's about what we call the hidden engulfing. According to the Malaysian, they gave about 3 types of engulfing, but to me, engulfing is this one that really have a different category from the rest. That have a kind of expressive feature than the rest. A hidden engulfing is the same thing like what we call the hidden base. What is a hidden engulfing? Engulfing is when you have this, you know, our normal SNR gap. If you refine this thing to a lower time frame, it results into an engulfing pattern. Let me go to a chart and show you. Let's prove that in the chart. Let's go to this. If this is let's look at a particular, let me go to daily, a particular gap, and see if we could refine it like this place now. See this place now. This place. This place. Now, I cannot take out this. I will have go down to my, but I don't have a premium. Let's circle it out like this. Like this. This is a gap. This is a gap. Because price react to it. Why price react to this place? Because it's a hidden base. There is a engulfing hidden in this particular pattern of a open and close SNR. There's a particular engulfing hidden here. That's why the price come into and tap into it. This place, there's a particular this here that's hidden there. This place, there's a particular this that is hidden here. When you see that, as you refine it, let's take this to 4 hours. Let's take it to 4 hours. Let's take it to 4 hours. You'll be able to see the engulfing. See it? You'll be able to see the engulfing very well. This is the engulfing. Can you see it? This is the engulfing here. This is the engulfing here. That this price comes up to tap into. You can see the engulfing within that open and close. He give us this, right? In 4 hours. Can you see that? In 4 hours. This is what he gave us. So this is the engulfing part of it. That won't make it to be a hidden stuff. Yeah. So, and price come back to tap into it. Yeah. But if you don't refine it, you will not be able to see it. You will not be able to see the hidden agenda that is lying in this, underlying in the gap pattern. You'll not be able to see it. You'll not be able to see it. If you go lower again, you see more. It could be 1 minute, it could be 5 minutes. Gap is gap. If it is hid, if you see a gap in 5 minutes, you take it to 1 minute, you see a engulfing that is hidden in that higher time frame gap. We'll come back, please. We'll come back. Another session is gone, so that we can come back and cover up with the last. This is Trendline and engulfing. We'll round up on that. I have less than 1 minute, so it will not take us on our way. So that is you must. If you go to your just continue to see it like that. Continue to browse the chart every time.